Welcome to Info Sounds by InfoDrip, your go-to source for insightful discussions and explorations. Each week, we break down complex ideas into clear, engaging conversations designed to inform and inspire.
Okay, so today we're diving into something that, might sound a little intimidating at first glance.
Yeah,
Bond buybacks.
right.
Specifically, we're going to be looking at Kenya's latest move in this area, and we've got some really fascinating analysis from InfoDrip Ltd. To kind of guide us through this.
Absolutely.
So think of this deep dive as your cheat sheet to understanding how this financial maneuver could potentially ripple through Kenya's economy from the big picture stuff, the macro level,
Yeah.
down to how it might actually affect, businesses and individuals like you listening right now.
What's really interesting here is this isn't the first time Kenya's implemented this kind of strategy.
Right.
They had a similar program back in 2019.
Okay.
So we'll also be looking at, how things might be different this time around.
Yeah, it's like they're, pulling out the playbook again,
Yeah.
maybe with some new plays or some revised plays.
Exactly.
And we're talking about a significant amount of money here. Kenya is aiming to repurchase about 50 billion Kenyan shillings worth of bonds,
Right.
which translates to roughly 365 million US dollars.
Wow.
So before we get, lost in the weeds of all the numbers and the jargon,
Yeah.
I think it would be helpful to take a step back for a second.
Okay.
And just make sure we're all on the same page.
Right.
What exactly is a bond buyback?
Okay.
And why would a country like Kenya choose to do this?
So think of it like this.
Okay.
It's kind of like when you refinance your house
Okay.
to try to snag a lower interest rate.
Okay. Yeah.
That's essentially what a bond buyback is.
Okay.
The government's buying back its own bonds from investors
Okay.
before they're due.
Gotcha.
It's a way for them to, potentially reduce their debt,
Okay.
maybe even free up some cash flow.
So less debt, more financial breathing room.
Exactly.
But I imagine Kenya probably has some, more specific goals in mind
Absolutely.
with this particular buyback.
Absolutely, yeah.
What are they hoping to achieve?
InfoDrip's analysis suggests
Okay.
they're aiming for a few key things.
Oh, okay.
First, they want to manage interest rates.
Okay.
Remember that refinancing analogy?
Yeah.
Well, if Kenya can successfully lower interest rates through this bond buyback,
Right.
borrowing becomes cheaper
Right.
for everybody,
Everybody.
from big businesses down to individuals like you.
So that could mean it's easier to get a loan to start a small business or to finally
Mercifully.
afford a mortgage.
Lower interest rates can spur investment
Right.
and, really get the economy humming.
Okay.
The second thing they're looking to do is to stabilize the Kenyan shilling,
Okay.
which is super important for trade
Right.
and attracting foreign investment.
Right.
A stable shilling
Yeah.
makes Kenya a more reliable and attractive player on the global stage.
It's all about projecting that image of stability and confidence, right?
Precisely.
Yeah.
And then the final thing
Okay.
that they're hoping to achieve is to control inflation. If they can carefully manage the money supply through this buyback,
Right.
they might be able to keep prices from, skyrocketing.
Okay, so that brings up a question for me.
Yeah.
Because I'm already thinking wait a minute.
Yeah.
Pumping all of this money into the economy
Yeah.
sounds like it could actually make inflation worse,
Right.
not better.
Yeah.
How does that work?
It's a delicate balance.
Yeah.
Think of it this way.
Okay.
Imagine, everybody in Nairobi suddenly has a ton of extra cash.
Okay.
They're all rushing to buy the same limited goods and services,
Right.
which drives prices up.
Supply and demand.
Exactly. That's the inflationary risk.
So too much money chasing too few goods.
Right.
And suddenly that bag of groceries costs twice as much.
Exactly.
Okay, what about the impact on the Kenyan shilling?
Okay,
Didn't we say earlier that a stable shilling was a good thing?
we did.
How could this potentially disrupt that?
So here's the irony.
Okay.
By trying to stabilize the exchange rate through this buyback,
Right.
it's possible
Yeah.
that they could actually backfire
Okay.
and actually weaken the Kenyan shilling.
Okay.
And that's because by increasing the money supply,
Right.
even with good intentions,
Right.
it's possible that could lead to a weakening,
Gotcha.
and a weaker shilling makes imports more expensive,
Right.
which hits businesses
Yeah.
and consumers
Yeah.
who rely on goods from abroad.
Right. It makes those imports more expensive.
Exactly.
Okay. So there's a real risk of making things worse
Yeah.
instead of better.
Yeah.
What about those interest rates?
Okay.
We were talking about them potentially going down.
Right.
What if they don't actually go down as planned?
So that's where the yield curve comes in.
Okay.
And the yield curve,
Yeah.
you can kind of picture it like a hill.
Okay.
Normally the hill slopes upward.
Okay.
meaning the further you go
Right.
or the longer the loan term,
Okay.
the higher you climb,
Right.
or the higher the interest rate.
So longer term, higher interest rate makes sense.
Right. But this kind of aggressive bond buyback
Okay.
can create weird bumps in the hill.
Okay.
It distorts the yield curve.
So instead of it being like a smooth, predictable climb,
Right.
you've got this like unpredictable terrain.
It-
And you don't know what's coming next.
And that makes it harder for the central bank
Right.
to manage interest rates effectively.
No, it makes them harder to manage. It creates this uncertainty.
Exactly.
Okay, so we've talked about kind of big picture stuff, the
Yeah.
macroeconomic implications.
Yeah.
But what about the everyday impacts on like
Yeah.
businesses and people like you listening right now?
Right. Let's bring it down to that micro level.
Right.
So let's imagine
Okay.
you're a small business owner
Okay.
in Nairobi.
Okay.
This buyback, if it's successful,
Yeah.
could mean
Yeah.
you're finally able to access that loan
Oh.
to upgrade your equipment
Right.
or expand your shop
Yeah.
because those interest rates are lower.
Right. Those lower borrowing costs.
Exactly.
Could really open some doors.
And on the consumer side,
Yeah.
maybe you can finally afford
Right.
that car loan you've been
Yeah.
putting off.
Yeah.
Or who knows?
Yeah.
Even a mortgage.
Right. Yeah.
It could put more money
Yeah.
back in people's pockets
Right.
and boost spending across the board.
Which helps businesses thrive.
Exactly.
But we also have to be honest here.
Right.
This isn't a magic bullet.
Right.
Right. And I'm thinking like easy access to cheap loans
Yeah.
can also be a recipe for trouble,
Absolutely.
right? What if people get in over their heads
Right?
with debt they can't afford?
That's a real concern.
Yeah.
Businesses and individuals need to be cautious
Yeah.
about taking on too much debt,
Right.
especially if the economy takes a downturn.
Especially if things change.
Right.
Yeah.
And then there's the risk of what economists call asset bubbles.
Okay, I've heard that term before,
Yeah.
but I always get a little fuzzy on like the details. Can you break that down for me and for everyone listening?
Think back to the U.S. housing crisis back in 2008.
Okay.
Too much easy money flowing around
Right.
led to inflated home prices.
Yeah.
Everyone thought prices would keep going up forever.
Yeah.
So they kept buying, driving prices even higher.
Yeah.
But it wasn't sustainable.
Right.
Eventually, the bubble burst,
Yeah.
prices crashed,
Oof.
and a lot of people lost their homes and savings.
That's a stark reminder that like
Right.
what goes up must come down.
Exactly.
So are you saying we could see similar bubbles forming in Kenya?
It's possible.
Yeah.
Maybe in real estate
Yeah.
or the stock market.
It's a possibility, and one that InfoDrip's analysis highlights.
Right.
This buyback could create a similar situation
Right.
where prices get artificially inflated,
Yeah.
and then that sets the stage for a crash down the line.
Exactly.
And we also can't forget about the government's limited resources.
Right.
Right. It's like a household budget. You only have so much to work with.
Right.
So if they're putting this huge chunk of change towards this buyback,
Right.
what could that mean for like crucial things like
Right.
building new schools or hospitals, things
Right.
that directly impact people's lives?
That's the trade-off.
Yeah.
And it's one that Kenyans will have to grapple with
Right.
as this buyback unfolds.
Okay.
Yeah.
So it's all about
Yeah.
weighing those potential benefits
Yeah.
against those potential risks.
Exactly.
And trying to figure out,
Yeah.
what's the best course of action
Absolutely.
for the country as a whole.
And for individuals.
Yeah. So that's kind of setting the stage for our deep dive
Okay.
into this bond buyback program.
Sounds good.
Now let's start digging into some of the specifics
Right.
and see what we can uncover.
Great.
Yeah.
I'm excited.
All right. So as we mentioned earlier,
Yeah.
this isn't Kenya's first rodeo with a bond buyback program.
Right.
They had a similar program back in 2019.
They did.
So let's take a trip down memory lane. Okay.
And see what we can learn from that experience.
That's good.
So first question.
Yeah.
Did that 2019 program achieve its goals?
So according to InfoDrift's analysis,
Okay.
it was actually considered quite successful.
Okay.
It helped reduce the government's debt,
Okay.
and it seemed to have a positive impact on market liquidity.
Okay.
Meaning there was more money
Right.
flowing through the system,
Which is generally good.
which is generally good for economic activity,
Yeah.
and it seems to have given investor confidence a boost as well.
Okay, so if I'm an investor looking at this new buyback, I might be thinking, hey, they pulled this off before.
Right.
maybe they can do it again.
Right.
It adds a bit of credibility to the whole thing.
It does, but of course,
Yeah.
you have to remember that every situation is unique.
Right.
The global economic landscape is different now than it was in 2019.
Of course.
What worked then
Yeah.
might not necessarily work now. Right, circumstances changed.
Exactly.
But I am curious,
Yeah.
what lessons do you think Kenya might have learned from
Yeah.
that 2019 experience?
Okay.
Anything they might do differently this time around?
One key takeaway might be the importance of clear communication.
Okay.
You know, if the government can effectively explain the rationale behind this buyback
Right.
and how it fits into their long-term economic strategy,
Okay.
that can go a long way
Yeah.
toward building trust,
Right.
both with investors
Right.
and with the Kenyan people.
Transparency is key.
Exactly.
No one likes to feel like decisions are being made behind closed doors,
Absolutely.
especially when it comes to something that could, impact their livelihoods.
Right. Exactly.
Okay, so communication transparency.
Yeah.
What other lessons might they have learned?
Another lesson might be around timing and execution.
Okay.
The central bank needs to carefully choose the right moment
Okay.
to launch this buyback
Right.
to maximize its effectiveness and minimize those risks we talked about.
Minimize those potential downsides.
Exactly.
It's a bit like surfing.
Yeah.
You need to catch the right wave.
Exactly. You need to time it just right.
Okay, I like that analogy.
Yeah.
Now, speaking of specifics,
Go.
InfoDrip's analysis mentions that this buyback is focused on 3 particular bond issues.
Right.
Why those specific bonds?
What?
What's the strategy there?
That's a really insightful question,
Thanks.
and it highlights a key point. Bond buybacks aren't just about
Right.
buying any old bonds.
Right.
They're often targeted
Okay.
at specific bonds
Okay.
based on a number of factors.
Okay.
Maturity dates,
Okay.
the interest rates they carry,
Right.
current market conditions.
So it's a bit like a chess game.
It-
You're strategically picking and choosing your targets
Right.
to achieve a specific outcome.
You got it.
Okay.
By carefully selecting those bonds,
Okay.
the central bank can really fine-tune
Okay.
its impact on interest rate.
Right.
Gotcha. Debt management.
Yeah.
And that all-important liquidity.
Yeah, we keep coming back to that.
Exactly.
Okay, so we've covered a lot of ground here.
We have.
Potential benefits,
Yeah.
potential risks,
Right.
lessons from the past,
Yeah.
strategic targeting of bonds.
Exactly.
If we had to boil it all down for our listeners out there,
Yeah.
everyday Kenyans,
Right.
what should they really be watching for
Right.
as this buyback unfolds?
Here's what I would say.
Okay.
Keep a close eye on how investors are reacting.
Okay.
Are they excited about this?
Okay.
Are they buying into the government's plan?
Right.
Or are they hesitant?
Yeah.
Maybe even pulling back their investments?
Okay.
Investor actions
Right.
often speak louder than words.
So even if the government is saying all the right things,
Right.
but investors aren't convinced,
Exactly.
that could spell trouble.
Exactly. It's all about confidence.
And another thing to watch
Yeah.
is the data. Right. Do we actually see inflation cooling down?
Right.
Are interest rates moving in the direction the government is hoping for?
Yeah.
Are businesses actually investing and creating jobs?
Exactly.
Those are the real indicators
Those are the real indicators of success.
of whether this is actually working.
Exactly.
So it's a wait-and-see game,
It is.
but an informed one.
Right.
We've got the knowledge now to
Yeah.
understand what we're looking at
Exactly.
and what it all means.
Now let's dig a little deeper
Okay.
into some of those potential implications
All right.
that we keep mentioning.
Yeah, let's break it down.
The impact on the macro level
Yeah.
and the micro level.
Macro and micro.
Exactly.
Yeah,
So let's start with the macroeconomic implications.
Okay.
The big picture stuff.
Yeah.
That affects the whole country.
The whole country.
InfoDrip highlights 4 key areas to watch.
Okay. All right.
Inflation control,
Okay.
interest rate management,
Okay.
credit and investment, and exchange rate stability.
All right. So let's unpack those one by one.
Right.
Let's start with inflation control.
Okay.
How could this buyback actually help keep inflation in check?
Okay.
Because I'll be honest, this is the one I'm struggling with the most.
Okay.
Like, pumping money into the economy just seems like it would make inflation worse, not better.
I understand the skepticism.
Yeah.
It's a common concern.
Yeah.
So remember when the central bank buys back those bonds,
Right.
they're essentially injecting money back into the economy,
Right.
and more money in circulation can lead to higher prices
Right.
if it's not managed carefully.
Okay.
It's that classic supply and demand scenario.
Supply and demand.
Too much money chasing too few goods.
Too much cash sloshing around, and suddenly
Exactly.
that cup of Kenyan coffee costs twice as much.
Exactly.
So how do they avoid that?
It's all about finding that sweet spot.
Okay.
The central bank needs to make sure there's enough money to stimulate growth,
Okay.
but not so much that it triggers runaway inflation.
It's a delicate balancing act.
I'm starting to see the challenge there.
Yeah.
Okay, let's talk about interest rates.
Okay.
You mentioned a few times now that buybacks can potentially lower interest rates.
Right.
But I'm still not entirely clear on how that actually works.
Okay.
Can you walk me through that?
Imagine you're an investor
Okay.
and you're holding a Kenyan government bond.
Okay.
The central bank announces this buyback program,
Okay.
and suddenly they're offering to buy back your bond.
Okay.
This creates demand, or
Right.
sort of like a bidding war,
Okay.
which pushes the price of that bond up.
Okay, so the price of the bond goes up,
Right.
but how does that translate to lower interest rates?
So here's the key.
Okay.
Bond prices and interest rates move in opposite directions.
Okay.
As the price of that bond goes up,
Yeah.
its yield, or the interest rate it pays,
Right.
actually goes down.
So it's like a seesaw.
Exactly.
One goes up, the other goes down.
Okay, that makes sense. But why is the government so keen on lowering interest rates?
Okay.
What's the big deal?
It's all about stimulating the economy.
Right.
Think about it.
Yeah.
Lower interest rates.
Yeah.
I mean, it's cheaper for businesses
Right.
to borrow money.
Right.
Suddenly, they can afford to invest in new equipment,
Okay.
expand their operations,
Right.
hire more employees.
It's a win for businesses and a win for job creation.
It's a win-win.
Okay, I see how that works.
Yeah.
And on the consumer side,
Right.
lower interest rates mean
Yeah.
it's easier for people to get loans for things like cars or houses.
Exactly.
So you have more money left over
No.
each month to spend on other things,
Exactly.
which further boosts the economy.
It's a positive cycle.
Sounds great on paper,
Right.
but as we've already discussed,
Yeah.
there are potential downsides too.
Absolutely.
Right. We've talked about inflation.
Right.
We've talked about the exchange rate. What other risks are we looking at on this
Right.
macro level?
One concern is that this buyback
Okay.
could distort the yield curve.
Ah, the yield curve, our old friend.
Exactly.
Remind us one more time what that is and why it matters.
Think of it this way.
Okay.
The yield curve shows us
Okay.
the relationship between interest rates
Okay.
and how long it takes for a loan to mature.
Okay.
Normally, longer-term loans
Okay.
have higher interest rates,
Makes sense.
kind of like a reward
Okay.
for lending your money for a longer period.
Right. Right.
But when the central bank starts manipulating things
Okay.
with a bond buyback like this,
Okay.
it can mess with that natural order,
Okay.
creating those bumps and dips we talked about earlier.
So instead of a smooth, predictable curve,
Right.
it becomes more like a roller coaster.
Exactly.
And that makes investors nervous.
Exactly. And if investors get nervous,
Yeah.
they might pull back their money,
Right.
which could hurt economic growth.
Okay, I'm definitely seeing the complexity here. It's
Yeah.
not as simple as just like
Right.
buying back some bonds and hoping for the best.
Exactly.
There's a lot of strategy and
Yeah.
potential pitfalls to navigate.
You're absolutely right.
And we can't forget about that final key area,
Right.
exchange rate stability.
Exactly.
We talked earlier about how a stable shilling
Yeah.
is good for trade and investment,
Right.
but how could this buyback
Okay.
actually help achieve that?
So by creating demand
Okay.
for the Kenyan shilling,
Okay.
when the central bank buys back bonds,
Right.
they need to use Kenyan shillings to do that.
Right.
So this increased demand can help strengthen
Okay.
the shilling's value,
Okay.
making it more stable and attractive on
Yeah.
the global market.
Okay. That makes sense. But
Yeah.
as we've learned, every action has a potential reaction.
Right.
What could go wrong on the exchange rate front?
Well, there's a risk that the buyback could actually lead to
That-
more volatility.
Okay.
Not less.
Okay.
Remember, increasing the money supply,
Right.
even with good intentions,
Right.
can sometimes weaken a currency.
So it's a bit like trying to tame a wild animal.
Yeah.
You might think you're in control, but it could suddenly buck and throw you off.
Exactly.
Okay. I'm getting a much clearer picture of these macro level implications.
Okay.
But what about the micro level?
Okay.
How could this all play out in the lives of everyday Kenyans?
Right.
You know, the people running small businesses,
Right.
trying to make ends meet,
Yeah.
thinking about buying a house.
That's where things get really interesting,
Okay.
because the micro level is where we see the rubber meet the road.
Okay. Yeah.
how these big policies actually play out
Right.
in people's day-to-day lives.
Right. In their everyday life.
Exactly.
Okay.
And InfoDrip's analysis points to both potential benefits
Okay.
and risks here.
Okay.
Let's start with the positive side.
Okay. I'm ready for a dose of optimism. Tell me something good.
Okay, well,
Yeah.
remember those lower interest rates we've been talking about.
Yeah.
If they actually materialize,
Okay.
it could be a game changer
Okay.
for small businesses.
Okay.
Imagine you're a shopkeeper
Okay.
in Mombasa,
Okay.
and suddenly you can afford to take out that loan
Okay.
to upgrade your inventory,
Great.
or maybe even open a second location.
Okay.
Those lower borrowing costs could open doors
Yeah.
that were previously closed.
Right.
And on the consumer side,
Yeah.
maybe it means finally being able to qualify for a mortgage
Okay.
or refinance your existing one
Right.
at a more favorable rate.
Yeah.
That could free up
Oh,
some
yeah.
cash each month.
Right. Put some money back in your pocket.
Exactly.
Yeah.
And that extra cash could go back into the economy,
Right.
boosting spending,
Yeah.
helping other businesses thrive.
So there's the potential for a real
Yeah,
win-win scenario here.
absolutely.
Businesses grow,
Yeah.
consumers have more spending power,
Right.
whole economy benefits.
Exactly.
But we have to be realistic here.
Right.
What are the potential downsides
Yeah.
for businesses and individuals?
Okay.
What could go wrong?
Well, one concern is that this easy access
Yeah.
to cheap credit could lead to overborrowing.
Okay.
People might get tempted to take on more debt
Right.
than they can handle,
Right.
especially if they're not anticipating potential economic bumps.
Right. Don't bite off more than you can chew.
Exactly.
And then there's the risk of those asset bubbles we
Wow.
talked about earlier.
Yeah.
Imagine you're thinking about buying a house in Nairobi,
Okay.
and suddenly everyone is rushing to do the same thing,
Right.
fueled by these low interest rates.
Right.
Prices start to climb rapidly,
Right.
and you feel like you have to get in on the action
Yeah.
before you miss out.
It becomes almost like a frenzy.
Right.
Everyone's caught up in the hype,
Yeah.
and that's when things can get dangerous.
Okay.
Because those inflated prices are often built on speculation and emotion,
Right.
not on real economic fundamentals.
And eventually the bubble bursts,
Right.
and a lot of people get hurt.
Exactly. That's the risk.
And it's
It's something that individuals and businesses alike need to be aware of.
yeah.
It's not just about access to credit.
Right.
It's about making responsible financial decisions.
Right. Being smart. Exactly.
Even when everyone around you seems to be throwing caution to the wind.
Right. Exactly.
Okay, now I want to shift gears slightly
Okay.
and talk about something you mentioned earlier. Fiscal policy.
Okay.
Can you remind us
Yeah.
what that is
Yeah.
and how it relates to this bond buyback?
So fiscal policy refers to the government's use of
Okay.
spending and taxation
Okay.
to influence the economy.
Right.
It's kind of like the flip side
Okay.
of monetary policy, which
Got it.
is what the central bank is doing
Great.
with this buyback.
Okay, so monetary policy is controlling the money supply.
And fiscal policy is about the government's budget,
Right.
how they're spending money,
Right.
and collecting taxes.
Exactly.
Okay.
And the two are often interconnected.
Okay.
You know, if the government is spending a lot of money
Right.
on this buyback program,
Okay.
it might mean
Yeah.
they have less money available for other things.
Right. Because at the end of the day,
Right.
they're working with a limited pot of money.
Exactly.
So every shilling spent on one thing
Right. Yeah.
means one less shilling available
Right.
for something else.
That's where the potential
Yeah.
for fiscal policy constraint
Fiscal policy constraints
comes
is.
in. Okay, can you give us a concrete example of
Yeah.
what that might look like?
Sure.
What are we talking about here?
Imagine the government
Okay.
had planned to build a new hospital
Okay.
in Kisumu,
Okay.
but they need to divert funds
Okay.
to cover the cost
Ah.
of this buyback.
Okay.
That's a fiscal policy constraint.
They're limited in what they can do
Right.
because of the choices
The choices they've made.
they've made.
Yeah,
So it's
right.
a trade-off.
It is.
And those trade-offs
Right.
can have real consequences for
Yep.
people's lives.
Exactly. And that's why it's so important to understand the broader context
Yeah.
of economic decisions. You know,
Right.
it's not just about numbers
Right.
and financial instruments.
It's about people.
It's about people.
It's about communities.
community.
It's about the choices we make, about
Yeah.
how to allocate resources.
Exactly.
Okay, I'm really starting to see
Yeah.
the
Yeah.
interconnectedness of all of this.
It is.
It's like a giant web,
Right.
and every decision creates ripples
Ripples.
that spread throughout the system.
That's a great way to think about it.
Yeah.
And it highlights the importance of taking a holistic view.
Holistic view. Okay, so we've covered a lot of ground here.
Yeah.
From the mechanics of bond buybacks.
Right. to their potential impact
Right.
on the economy as a whole
Yep.
and on individuals.
Individuals.
Like you and me.
Yeah.
But before we move on,
Okay.
I want to circle back to something you mentioned earlier.
Yeah.
Investor confidence.
Okay.
Can you elaborate on that
Sure.
a bit more?
Yeah.
Why is investor confidence so crucial?
Okay.
And what are the signs we should be looking for?
So investor confidence
Yeah.
is like the oxygen
Okay.
that fuels economic growth.
Okay.
When investors believe
Yeah.
in a country's economic prospects,
Okay.
they're more likely to invest their money there,
Right.
which leads to job creation,
Okay.
innovation,
Right.
and overall prosperity.
So it's about more than just the numbers.
It is.
Right. It's about perception.
Perception.
It's about trust.
Trust.
It's about belief in the future.
Belief in the future, exactly.
Okay.
Investors are constantly assessing
Yeah.
risk and opportunity.
Okay.
And their decisions are influenced
Yeah.
by a wide range of factors,
That's right.
including government policies,
Okay.
economic data,
Right.
political stability,
Mhm.
and social trends.
It's like they're trying to piece together a puzzle.
Yeah.
Looking for clues about whether
Figure-
a particular country
Yeah.
is a good bet for their investment.
That's a great analogy.
Yeah.
And in the case of Kenya's bond buyback program,
Yeah.
investor confidence
Okay.
will play a crucial role
Okay.
in determining its ultimate
Okay.
success or failure.
Okay. Help us understand
Yeah.
that connection a
Sure.
little bit better.
Okay.
How could investor confidence
Right.
make or break this buyback?
Let's say investors see this buyback
Okay.
as a sign that Kenya is serious
Okay.
about managing its debt
Okay.
and stimulating its economy.
Okay.
They might see it as a positive signal,
Okay.
a sign that the government is taking proactive steps
Right.
to ensure long-term stability.
Right. So that positive perception could create a virtuous cycle.
Exactly.
Investor confidence leads to more investment,
Right.
which further boosts the economy,
Right.
which further reinforces investor confidence.
Exactly.
Yeah.
But on the flip side,
Okay.
if investors are skeptical
Okay.
about this buyback,
Right.
if they see it as a sign
Yeah.
of economic weakness
Right.
or a risky gamble,
Yeah.
they might pull back
Right.
their investments.
Right.
And that could have a ripple effect
Ripple effect.
throughout the Kenyan economy.
So lack of confidence leads to less investment,
Right.
which weakens the economy,
Right.
which further erodes confidence.
It's a bit of a self-fulfilling prophecy.
And that's why the government needs to be very careful
Right.
about how it manages this buyback
Exactly.
and how it communicates its intentions
Absolutely.
to the investment community.
Exactly.
So transparency
Transparency.
and clear communication are crucial. Investors need to feel like they're being brought along on the journey, that they understand the rationale behind the government's actions.
Exactly.
Okay, so we've talked about
Yeah.
the importance of investor confidence,
Right.
but how can we actually gauge that confidence?
Okay.
What are the signs
Yeah.
we should be looking for?
Well, one key indicator is foreign direct investment.
Okay.
Are we seeing an increase in foreign companies
Okay.
investing in Kenya?
Okay.
Are existing investors
Yeah.
expanding their operations?
All right.
That's a good sign
Okay.
that there's confidence
Right.
in the economy's future.
So it's about putting your money where your mouth is,
Exactly.
so to speak.
Right.
And another thing to watch is
Yeah.
the performance of the Kenyan stock market.
Okay.
Are stock prices rising?
Right.
Are trading volumes strong?
Right.
Those are signs.
Those are signs that investors are optimistic
Okay.
about the future.
So we're looking for tangible signs
Exactly.
of investor activity, not just empty rhetoric.
Precisely.
Okay.
We can also look at things like
Yeah.
credit ratings.
Okay.
Are international rating agencies
Yeah.
upgrading Kenya's credit rating?
Okay.
That's a signal
Right.
that they see the country's economic prospects as improving.
Okay. So there are a lot of different data points
There are.
we can look at
Yeah.
to get a sense of investor confidence.
Exactly. And it's important to remember
Okay.
that investor confidence isn't static.
Right.
It fluctuates.
It changes.
It changes
Yeah.
based on a wide range of factors.
Of course.
So it's something that we need to monitor.
Monitor, keep an eye on.
Keep an eye on.
Continuously.
Continuously.
Okay, so we need to stay informed.
So stay informed
Keep our eyes on the data
on the data.
and be aware
Be aware
of the broader economic context.
of the context.
Okay.
Yeah. And that brings us to another important point.
The role of perception
Okay.
versus reality.
Sometimes investor perception
Okay.
can be just as important as economic reality.
Okay.
even if a country has strong economic fundamentals.
Yeah. Okay.
Negative perceptions,
Yeah.
perhaps fueled by political instability,
Okay.
social unrest,
Right.
or unfavorable media coverage,
Right. Bad press.
exactly, can deter investors.
So it's not enough to have a good story.
Right.
You also need people to believe it.
You need people to believe it, exactly.
Okay.
And that's where things can get tricky,
Okay.
because perception
Yeah.
can be influenced by factors
Yeah.
that are outside of the government's control.
It's like a popularity contest.
It is.
You need to win over
Right.
the hearts and minds
The hearts and minds
of investors, not just their wallets.
That's a good analogy.
And it highlights the importance of
Okay.
managing perceptions,
Managing perception.
communicating effectively,
Communicating effectively.
and building a strong reputation
Strong reputation.
on the global stage.
On the global stage.
Okay, so the government needs to be aware of
Yeah.
how its actions are being perceived
Right.
and make sure it's sending the right signals
The right signals.
to the investment community.
To the investment community? Absolutely.
Okay.
It's about crafting a narrative
Okay.
that is both compelling
Right.
and credible.
Right.
A narrative that resonates with investors
Okay.
and persuades them that Kenya
Right.
is a safe and profitable place to do business.
So it's not just about crunching the numbers.
Right.
It's also about storytelling.
Exactly. And that story needs to be grounded in reality,
Okay.
supported by solid data,
Right.
and delivered with authenticity
Okay.
and conviction.
Okay, that makes a lot of sense.
Yeah.
It's like a pitch to investors,
It is.
trying to convince them
Right.
that Kenya is a good bet for
Yeah.
their capital.
That's a great way to think about it.
Yeah.
And like any good pitch,
Yeah.
it needs to be backed up by a solid track record,
Okay.
a clear vision for the future,
Right.
and a team that investors can trust.
Right. Investors aren't going to be swayed by
Right.
empty promises or wishful thinking.
Exactly.
They want to see
Oh, I'm getting
evidence
ready.
that their investment is safe
Right.
and has the potential for
Yeah.
a good return.
Precisely. And that brings us back
Okay.
to this bond buyback program.
Okay.
It's a big move,
Yeah.
and it's one that investors will be watching closely
Yeah.
to see if it lives up to the hype.
Okay. So we've covered a lot of ground here.
We have.
From the mechanics of bond buybacks
Yeah.
to the intricacies of investor confidence.
Exactly.
But before we wrap up,
Okay.
I want to take a step back
Okay.
and ask a broader question.
Okay, shoot.
What does this bond buyback program tell us
Okay.
about Kenya's current economic situation
Okay.
and its future prospects?
That's a great question.
Yeah.
And it's one that analysts and investors are grappling with
Right now.
right now.
Yeah.
The decision to launch
Okay.
a bond buyback program
Okay.
can be interpreted
Yeah.
in different ways.
Okay.
And there's no single definitive answer.
So it's open to interpretation,
It is.
like a Rorschach test
Kind of.
of economic policy.
In a way, yes.
Okay.
Some might see it as a sign of economic strength,
Okay.
a move by the government
Yeah.
to proactively manage its debt
Okay.
and stimulate growth.
Okay.
Others might view it as a sign of desperation,
Okay.
a last-ditch effort
Yeah.
to address fiscal challenges
Okay.
and boost investor confidence.
So it all depends on your perspective
It does.
and how you interpret the available information.
Exactly. And that's why it's so important to
Okay.
consider
Okay.
multiple viewpoints,
Okay.
analyze the data carefully,
Right.
and avoid jumping to conclusions.
Don't jump to conclusions.
Okay.
Okay.
Yeah.
So how can our listeners
Yeah.
approach the situation?
With a critical
Yeah.
and informed mindset.
Okay.
What are some key things to keep in mind
Okay.
as they follow this story?
Here are a few suggestions.
Okay.
First,
Yeah.
pay attention
Okay.
to the broader economic context.
The broader economic context.
Okay, what's happening in the global economy?
Okay.
What are the key trends
Right.
and challenges facing Kenya?
Yeah.
How does this buyback program fit into
Okay.
the government's overall economic strategy?
So it's about understanding the backdrop
Exactly.
against which this buyback is taking place.
Exactly.
Okay.
Second,
Okay.
watch the data closely.
Watch the data.
Yeah. How is the buyback
Okay.
actually impacting
Okay.
inflation,
Okay.
interest rates,
Right.
the exchange rate,
Right.
and other key economic indicators?
Right.
Are the government's projections accurate
Okay.
or are there surprises?
So it's about separating rhetoric from reality
Exactly.
and seeing how the numbers
Right.
actually play out.
Precisely.
Okay.
Third,
Okay.
consider the potential implications
Okay.
for different sectors.
Different sectors of the economy.
The Kenyan economy.
Okay.
Which industries stand to benefit
Okay.
and which ones might face challenges?
Okay.
How will these ripple effects
Right.
shape the overall economic landscape?
So it's about understanding the nuances
It is.
and recognizing that there's no one-size-fits-all impact.
Exactly.
Okay.
And finally,
Okay.
pay attention to the narrative.
The narrative. Yeah.
Now, how is the government
Okay.
communicating about this buyback program?
Okay.
Are they being transparent
Right.
and accountable?
Okay.
Are they effectively addressing concerns
Right.
and building investor confidence?
So it's about recognizing that perception matters
It does.
and that the story the government tells
Right.
can have a significant impact
Exactly.
on the outcome.
Exactly.
Okay.
By considering all these factors, okay.
Listeners can develop a more informed
Okay.
and nuanced understanding
Okay.
of Kenya's bond buyback program
Okay.
and its potential implications
Right.
for the country's economic future.
That's a great takeaway.
Yeah.
It's about engaging with this topic critically,
Critically.
asking the right questions.
Asking the right
Well,
questions
and being open
and being open
to multiple perspectives.
to multiple perspectives.
Okay. Now let's move on to a really interesting aspect
Okay.
of this buyback, how it might affect
Okay.
specific sectors of the Kenyan economy.
That's where things get really granular.
Okay.
And it's key to understanding
Check.
the full picture.
Right.
The impact of this dieback
Yeah.
won't be evenly distributed
Okay.
across all sectors.
Right.
Some industries
Yeah.
might see a bigger boost
Okay.
than others,
Okay.
and some might even face challenges.
Right. Some winners.
Winners and losers.
Some losers.
Exactly.
Okay, so let's dive into
Okay.
those sector-specific implications.
Right.
What insights can we glean
Right.
from the InfoDrip analysis?
InfoDrip's report highlights
Okay.
the potential
Okay.
for significant benefits
Okay.
in sectors that rely heavily
Okay.
on credit and investment
Okay.
to thrive.
Okay.
Think manufacturing,
Okay.
agriculture,
Okay.
and infrastructure.
So industries that need access to capital to
Exactly.
grow and
They grow and
expand.
expand. Makes sense.
Yeah.
If those interest rates
Right.
drop
Right.
and liquidity increases,
Right.
as we've discussed,
Right.
that could be a real game changer for those sectors.
Absolutely.
Can you give us some concrete examples of
Yeah.
how those industries might benefit?
Sure. Let's start with manufacturing.
Okay.
Imagine you're a textile manufacturer
Okay.
in Nairobi.
Okay.
You've been wanting to expand your operations,
Okay.
maybe invest in some new equipment.
Yeah.
To boost production.
But those high interest rates
Right.
have been holding you back.
It's like a financial hurdle.
Exactly. They can't quite clear.
But if this buyback leads to lower interest rates,
Okay.
as the government is hoping,
Yeah.
that hurdle suddenly
Yeah.
becomes a lot smaller.
Right.
Suddenly that loan for new equipment
Okay.
becomes much more affordable,
Right.
and those expansion plans
Yeah.
become much more feasible.
So it's like a green light for growth.
Exactly.
And that growth could translate into more jobs,
Right.
more economic activity,
Right.
more prosperity
More prosperity.
for everyone involved.
Precisely.
Okay.
And the same logic applies to agriculture.
Agriculture. So-
Okay, think about the thousands of farmers across Kenya
Okay.
who rely on credit
Okay.
to purchase seeds,
Right.
fertilizer,
I
and
mean-
equipment.
Lower interest rates could make a huge difference in their ability to
Absolutely.
invest in their farms,
Invest in their farms.
increase their yields.
Right.
Increase their yields.
Right. It could boost productivity
Exactly.
and help ensure food security
Food security
for the entire country.
for the entire country.
Okay.
And then there's infrastructure.
Infrastructure. Okay.
Kenya has ambitious plans to develop its infrastructure.
Okay.
Roads,
Okay.
railways,
Right.
ports.
Right.
Energy.
All the important stuff.
But these projects require
Yeah.
massive investments.
Of course.
If the bond buyback can help lower borrowing costs
Okay.
for the government,
Okay.
it could make it easier for them
Okay.
to finance these crucial projects.
So it's about creating a more favorable environment
Exactly.
for investment, both for the private sector
Right.
and for the government itself.
That's a great way to put it.
Okay.
And that's really the key
Okay.
to unlocking
Yeah.
long-term
Economic.
growth
Yeah.
and development.
So it's a long-term play.
It is.
Okay. So we've talked about the potential winners. Now let's flip the coin
Okay.
and look at the other side.
Okay.
Which sectors
Yeah.
might be most vulnerable to the potential downsides
Oh.
of this bond buyback?
One area of concern is import-dependent sectors.
Okay.
If the buyback leads to a weaker Kenyan shilling,
Right.
as we've discussed,
Right.
it could make imported goods
Right.
more expensive,
More expensive.
squeezing profit margins
Right.
for businesses that rely on those goods.
Right, because a weaker shilling means
Yeah.
you're essentially paying more
Right.
for the same amount
Exactly.
of foreign currency.
It's like a hidden tax.
Like a hidden tax on imports.
On imports, yeah.
And this could have a ripple effect
It could.
throughout the economy.
Exactly.
If businesses have to pay more
Right.
for imported inputs,
Right.
they might have to raise prices on their products,
Right.
which could lead to higher inflation
Higher inflation.
and hurt consumer spending.
Exactly.
So it's a delicate balancing act.
It is.
The government is trying to stimulate growth,
Right.
but they also need to be mindful of
Right.
the potential impact
Right.
on inflation and the exchange rate.
Exactly. And that's why it's so important
Yeah,
to have a comprehensive economic strategy.
correct.
One that takes into account
Yeah,
all of these interconnected factors,
all the moving parts.
all the moving parts.
Okay, so import-dependent sectors
Yeah.
are one area to watch.
One area to watch.
What other industries
Okay.
might be particularly vulnerable?
Another potential area of concern
Okay.
is sectors that are highly sensitive to inflation.
Okay, so if the buyback
Right.
does end up fueling inflation,
Right.
as we've discussed,
Right.
those businesses might struggle.
To maintain their profit margins.
Right.
If they can't pass those higher costs
Yeah,
on to consumers.
right. Because if their input costs are rising,
Right.
but they can't raise prices, they're getting squeezed from both sides.
Squeeze.
Yeah.
Exactly.
So industries that operate on tight margins or
Yeah.
that face intense competition
Right.
might be particularly vulnerable.
Might be particularly vulnerable.
Okay, so we're talking about industries
Yep.
where pricing power is limited. They don't have a lot of flexibility to adjust their prices without losing customers.
Exactly.
And that's why it's so important for businesses
Right.
in those sectors to be proactive,
Proactive.
to have contingency plans in place
Contingency plans.
in case inflation
Yeah.
does start to tick up.
So it's about being prepared,
Right.
about anticipating potential challenges,
Okay.
and having strategies in place
Having strategies in place.
to mitigate those risks.
Okay. So
Yep.
it's about being prepared,
Being prepared.
anticipating potential challenges,
Anticipating challenges.
and having strategies in place
Strategies in place
to mitigate those risks.
to mitigate the risks.
Okay.
And that's really the key message
Okay.
for all businesses,
Okay.
regardless of sector.
Regardless of sector.
Yeah. This bond buyback
Yeah.
is a significant economic event,
Right.
and it's one that could create
Yeah.
both opportunity
Opportunities.
and challenges.
Challenges.
Those who are most informed,
Okay.
most adaptable,
Okay.
and most strategic
Right.
will be the ones who are best positioned
Okay.
to navigate this complex landscape.
Okay, that's a great takeaway.
Yeah.
It's not about sitting back
Right.
and waiting to see what happens.
Right.
It's about being engaged, being informed, and being proactive.
Absolutely. And that's why we're having this conversation today.
Right.
You know, we want to empower our listeners
Right.
to understand these complex issues,
Yeah.
to ask the right questions,
Right.
and to make informed decisions
Right.
that are in their best interests.
This has been a truly insightful
Yeah,
exploration of Kenya's bond buyback program.
it has been.
We've covered a lot of ground.
A lot of ground.
From the mechanics of the buyback itself to
Yes.
the potential ripple effects
Yeah.
on the macro and micro levels. And now to the sector-specific implications.
Sector specific.
But as we wrap up,
Okay.
I want to leave our listeners with one final thought.
Okay.
This is just the beginning of the story.
That's a great point.
Right.
Yeah,
The bond buyback is a dynamic process,
it is.
and the full impact won't be known for some time.
Right. It's going to take a while to see how this all plays out.
It's going to take a while, yeah.
Yeah.
It's important to stay informed,
Stay informed.
to continue to monitor the data,
Monitor the data.
and to be open to new information
Absolutely.
as it emerges.
As it emerges.
Right. We've equipped our listeners with
Yeah.
the knowledge and the tools to understand this complex issue.
Yeah.
But now it's up to them
Now it's up to them
to continue the exploration.
to continue the exploration.
They need to stay engaged,
Stay engaged.
stay curious,
Stay curious.
and stay informed.
And stay informed.
And that's what makes economics so fascinating.
It is.
Right.
Yeah.
It's a constantly evolving field
Right.
full of surprises and challenges.
Full of surprises.
Yeah.
But by engaging with these issues critically,
Okay.
by asking the right questions
Yeah.
and seeking out
Yeah.
diverse perspectives,
Yeah.
we can all become more
Mhm.
informed citizens
Right.
and better stewards of our economy.
That's a perfect note to end on.
It is.
Thanks for joining us on this deep dive.
It's been a pleasure.
And thanks to all of you for listening.
Thanks, everyone.
We'll be back soon with another fascinating exploration
Looking forward to it.
of the world around us.
Yeah.
Until then, keep exploring, keep learning,
Keep learning.
and keep diving deep.
Keep